Hello world. My name is Ara, and I'm a full-stack web developer with a passion for investing and teaching. So many people ask me, what stock should I invest in? What stocks can I invest in? What stocks are going to do well? All kinds of questions like that. So today I'd like to make a video of 5 stocks that I would put my money into right now, this week, Monday morning. These are great picks. I've put a lot of thought and effort into selecting these stocks, and some of them I've invested in very recently, and some of them I've invested in for my daughter. But all 5 are very, very great picks. Number 1 on the list, my favorite stock to invest in right now, and I bought shares today, I bought shares for my daughter yesterday, is Facebook. Facebook is trading at 40 times earnings, which seems very expensive. It's $155 a share. But the reason it's my favorite stock is because it's growing earnings and revenues like crazy. It's growing earnings in the ballpark of 50% a year. It's growing revenues in the ballpark of 50% a year. This will be a 25 PE stock if the price does not move up. But I think the price is going into the $200 range by the end of, sometime in 2018. I think at $155 a share, it is very, very inexpensive when you consider the growth rate, the earnings rate, the earnings growth rate, and the revenue growth rate. This is such an incredible investment right now. Today, you can invest for $155 a share, and this stock will probably be worth about $200 a share sometime next year. So that means if you were to buy 10 shares for $1,550, that would be worth $2,000 by the middle of next year. Such a great investment. Second on the list, not necessarily my, the rest of the picks are not going to be in order. Second on the list is Google. Google is such a consistent growth company, such a consistent earner, such a consistent revenue grower, sales grower. This company also makes its money from advertising. It's trading at about a 33 price to earnings ratio, and because of its growth rate, the forward price to earnings ratio, meaning considering the earnings that it's going to make over the next 12 months, this stock is trading at about 28 times forward earnings. It's not necessarily inexpensive, but considering the track record that Google has and how much money they're going to make next year, the year after, it does seem like a bargain right now. Currently, it's trading at $963 for a share, and I think that could definitely double in the next 5 years. This could be a $2,000 stock per share within the next 5 years. Paychex would be my third pick. Payx. Paychex is currently trading around $60 a share and has a multiple of 27 times earnings. For this stock, 27 times is a little bit pricey, but this stock has great earnings growth, great revenue growth, and it's also paying a 3% dividend per year. So if you were to buy 16 shares for $1,000, you'd be making $30 a year just in dividends. And this is a stock that could easily double in the next 5 to 10 years. This could be a $120 stock in the next 5 to 10 years. The economy is going good. People have jobs. This company makes money when people get their paychecks. They get a small percentage of payroll. Everything is going good for them. Plus, they have that big 3% dividend. So this is number 3 on my list. Number 4. Hormel Foods. Hormel Foods is a company that I bought shares for my girlfriend, I bought shares for my daughter, and this is another consistent earner. Their revenues and their earnings are going up every single quarter. You can see that. You can look at the financial statements and find out. This company also pays a 2% dividend, which is pretty nice. That's about average for dividend-paying companies, and the benefit of getting a 2% dividend is great on top of getting that earnings growth. Hormel the ticker symbol is HRL, and it's currently trading around $33 to $35 a share, if I remember correctly. This company could easily go to $70 a share within 5 years. Their earnings and revenue growth is just terrific. And I like the idea of investing in food products, but not necessarily competing with Walmart and the Amazon and Whole Foods deal that just happened. Number 5 on my list is T. Rowe Price. This is one of my personal favorites. I like to look for companies that have lots of cash on the books. All 5 of these companies that I'm mentioning today are in great financial shape. They have cash. They have either no debt or very low debt. And T. Rowe Price is right there. T. Rowe Price is growing revenues. T. Rowe Price is growing earnings. T. Rowe Price pays a 3% dividend, actually more than 3% dividend. It's like 3.3% dividend. And the best thing is it's only trading at a 14 multiple. It's $73 a share right now, and they are trading at 14 times earnings. This is very, very low. This company has grown their dividends consecutively, consistently for over 25 years. And because of worries that people are moving into index funds instead of mutual funds, which means T. Rowe Price is going to get a very small share of the profits instead of a big share of the profits like in mutual funds. People are worried that their earnings growth is not what they would normally be hoping for. But this company has been around forever, and they've seen it all, and they've grown revenue, they've grown earnings. They don't have any debt. They have loads of cash. They're paying out over a 3% dividend, and they're only 14 times earnings. If you have $20,000, invest $20,000 in T. Rowe Price. It is such a terrific company. Sometimes I actually use this company as a place to put my money while I'm trying to decide what other companies to invest in. Instead of just having my money in cash, I'll put it in T. Rowe Price for a little while. And occasionally collect that dividend, and the stock has done pretty well for me. But I think T. Rowe Price is probably the most conservative on the list, but it could absolutely double in 5 years. It's only trading at 14 times earnings. If they grow earnings a little bit, grow revenues a little bit, and it starts trading at 15, 16, 17, 18 times earnings, this could be a $140 stock within 5 years. This is such a terrific investment. I don't know why more people don't invest in it. This is one of those stocks that's not talked about on TV every day, but it would be considered a dividend aristocrat. You got to Google that term, dividend aristocrat. They've raised dividends for 25 years consecutively. Anyway, these are 5 of my top picks right now for this week. I appreciate you guys listening. I'm looking forward to looking back on this video in a couple of years and see how my 5 top picks did. I do need subscribers, so please hit that subscribe button and share this video with your friends. Thanks, guys.